What's up, gentlemen? Good to see you both here. Hope you're having a good week. Hope everyone here watching is having a good week. This is the Tuesday, July 29th edition of Profit Panel.
Can you believe we're through July already? You
Dude,
know, I,
it's
I
crazy.
always say time flies, but this year it's like at warp speed.
I know, man. It's like you work hard during the week, you have plans on the weekend, right? 'Cause you want to like squeeze summer for all it's worth, and then you're back into the work week, rinse and repeat. Summer's over in the blink of an eye. It's crazy.
Got to make every minute count.
That's so true, dude. That's so true. How you doing, Jeffrey?
Doing all right. Doing all
You
right.
squeeze, you squeeze in summer for everything it's worth.
Man, it's hot and nasty here. I
I lived in,
yeah,
did I ever tell you I lived in Nashville for a while?
no, but there's a
Yeah.
heat advisory been going on for like a week here. Like temperature, like I guess temperatures in like the 90s, but like the heat index is like 115 or some craziness with the humidity.
Yeah.
So,
It was definitely hot.
How's the
Hot.
AC? How's the AC in that Cybertruck?
oh, it's beautiful, man. I love the fact it blows cold air right up my booty out of the seat.
Nice.
Yeah.
I got to try that. Got
It's
extra
got a it's got heated and cooled seats, so it blows cold air through the
extra
seat.
for that booty blow off.
I just last week I was talking about that Grok upgrade, and I got that yesterday, and they actually installed it to the truck. So I've been talking to it.
Is that a wireless install? You gotta take it in.
No, it's completely over the air. It just does it, and it's beautiful and easy, simple. It's like the 20th upgrade I've had since I've had the truck for a year now.
Can
Nice.
that Grok read your mind?
No, it's
Nice.
this is a
Almost.
beta version, and right now it's a little bit like a goldfish.
Dude,
Any
who do you think you're
connectivity
who do you think you're
pickup.
talking to, Jack? What you're watching is a hologrammatic uh projection of Jeffrey's consciousness into the screen, man. It's
Yeah,
already
this is
taken
just a
over.
it's just a copy of a copy right here. It's
Where we're going. That's where we're going.
Oh man. All right. Well, folks, gentlemen, we have some very cool stuff to talk about, I think. Hopefully you guys think it's cool, like I think it's cool. And if you don't, then we'll talk about something cooler. Um, but get here. Didn't so hey, disclaimer, not financial advisors, do your own research, everything you need to this is just our own opinions. There's no guarantee of making, saving, or investing money in the markets. Always remember to make smart decisions and do your own research. Kay, yeah, you got in on that AMD trade. How'd you do? Let me know. Money, percentage gain. I'd love to hear it. I'm sure everyone else will too. Um, and if you don't mind, we'd just love to grab that for our testimonial bank. Um, am I sharing my screen? No, I'm not. Oops. Well, that was the disclaimer, folks. If you can't see it, I'll just flash it up here. Where am I? Where is it though? Ah, there it is.
There's one for me.
All right. So disclaimer, there you go, folks. Look at it, love it. Um, that's right. That's right, Kay. Made 25% in a few minutes, should have held longer, but profit is profit. That's right. Once Jeffrey starts talking, we're probably going to exit that rocket trade too. We're having a little bit of a sell off on rocket,
I'm
but we're
I've
still.
been out for 2 weeks, so
Oh yeah, so we've been doing this thing. I built this options flow app, and we've just been like day trading options, just going like just out of the money calls, and it's been working out pretty well. We had I think we were up 40% on Rocket just today, but then it's selling off. Um, yeah, but
I got
not
called
nothing
I
long
got
term.
called out on the 18th, so right at the peak.
Oh yeah, look at that! Wow, that's spiked. I haven't even been really following Rocket. Damn, that broke above all my levels though, because I was going over. Where are we here? Yeah, I had these plotted out for a while, but that broke over it. Hardcore then sold off. Man, look at that.
A
I
lot
was
of people, a lot of people getting called out last Friday on a lot of different stocks.
Yeah, that was like the high water mark, right? It was like everybody was like, "Oh, one more gas pedal." Maybe then coming into this week, this big week of earnings.
Got got called out of Goog, got called out of IBIT, got called out of AVGO, ANET. Oh man, just all kind of stuff.
Damn.
A lot
Adam, are you speaking Polish there, my man? It looks like a Polish last name, or maybe it's like Romanian. I don't know. But I cannot understand that. So if you want to rephrase that in English, um, but uh, but yeah. So so earnings, right? We got the a lot of them coming up in the next couple days, but just earnings review. Yeah, I don't know who was talking about this, but we were talking about UNH maybe. UNH might be recovering, which does not look like it's going to be the case. They're down.
Hey, on Friday, I said it was going lower.
Oh, you did? Okay, okay. Maybe someone else said they were going higher. You said they were going lower. They are lower today, in fact, significantly lower. I can't believe they're still $250 though. Geez, 270 actually, but wow.
Yeah, my target's down a little bit further, right around 215. If we get down there, that might be
Where's
the
that?
bottom.
That you have to go. That'd be the bottom almost,
Yeah,
right?
that's the bottom I'm looking for, like the bottom. Like
Yeah. Wow. I can
bottom
say
of
it's
this move.
95 here down in what COVID, but can't really.
Yeah, I'd wait till, I mean, personally, I'm waiting for like 230 before I sell some puts on it. And
Yeah.
then try to pick it up for the recovery, because I think that's going to be the bottom, and then we move up from there.
Right. I mean, they're one of the biggest health insurers, right? It's like they will reach a bottom at some point. They're not gonna. I mean, who knows? I wouldn't think they're gonna go.
Hey, nothing has to happen.
Yeah. No, it's so true. It's so true. I mean, abysmal earnings, horrible forward guidance. I guess their revenue beat, but
Terrible leadership.
yeah, they haven't really contained that fallout from
They
the Luigi thing.
There's no jockey to bet on.
No, no,
That's a
no. Definitely wouldn't want to sell a put at this point, though, right? I mean, we're kind of in free fall mode.
thing is rotten from top to bottom.
Yeah, yeah, that's right. Art Luigi shot the boss.
I bought a put right at 600 and cashed it out right around 450.
Oh hell
And
yeah.
then wow, it just keeps on going.
Yeah, no, I mean, I mean, I would stay away. I mean, we have no support here at all. We just gotta follow this down, see where it's gonna land before we do anything. There's nothing. I mean, there's nothing. I guess we go to the month chart, it'd be easier to see.
Yeah,
I mean, look at that.
yeah,
Look at that. Woo! That is some
that's
crazy.
right what I'm looking at right there on my screen.
So you're thinking like right up here to 200, like right at this like sort of double bottom before the COVID lows?
I mean, COVID just kind of ground the bottom right there, and we dipped that final dip on COVID, and then it took off. And I think we're going to revisit that area
Yeah.
and then make a bottom in that, 210 to 230 area, and then that should be the bottom.
Yeah. Art here tried to catch that bottom, tried to catch these fallen knives. That's
And
hard.
cut
It's a
you up
hard
every
game to
time.
play. Yeah. Yeah, that's a hard game. UNH, yeah, it's down, it's bad. Uh in general though, they're not the only ones. So I was actually interested in this. Novo Nordisk.
Oh, NVO.
NVO, yeah, that's right. Um, so they cut their deal. They were the ones that cut their deal with Hims, right?
Yeah, NVO is with Hims, and Lily is with Noom or whatever.
Right. I guess I mean, I don't know if this was related to that, but Hims is faring much better than NVO. We'll see how they go after earnings, but yeah, I don't know. I mean, NVO seems to have gotten the raw end of that deal. I don't know. I didn't really dive too deep. I don't know how related it is to that specifically. For everybody who doesn't know, I think what was it? Novo was licensing their Wegovy to Hims for basically like white label or off brand, right? And then they didn't like what Hims was doing.
So Hims is a compounding pharmacy, which means they can make up their own things. And they were I guess they got a license to use the semaglutide that's in Wegovy and make it into their own, product. They were doing it under an emergency authorization thing because it was in a shortage, but then both Lilly and NVO claim that it's no longer in shortage. They have enough capacity to make it. And so that removed the emergency authorization from semaglutide for compounding pharmacies like Hims and Noom, and there's a whole variety of them. And at that point, Hims had to work a deal with either Lilly or NVO to be able to keep selling it. And I guess NVO got mad at them for whatever they were doing and ended their contractual agreement. So Hims has been kind of on a downward slide since then. But
It's no longer the darling that it was. That is for sure. Hims.
No, still pretty.
Hims is getting a little stinky.
Yeah, I mean, we'll see what happens after this earnings. I don't know what's the estimate. 551. Last time it was 580. So they're expected to lose revenue. Earnings per share is supposed to be down as well. So yeah, not looking good. I mean, they're. I feel like the Hims is one of those stocks that's driven by the options trading more than fundamentals or anything. But so it still could be pretty crazy. I mean.
the model's interesting too, where they have the online doctor that you just talk to for a second, and then they prescribe you whatever it is, either, erection pills or, weight loss drugs or whatever.
Whatever you want, whatever you want.
Mhm.
The doctor does a full comprehensive review in 5 minutes. It can tell you.
It's really crazy that you don't have to see a doctor, right?
Right.
There's almost a little bit of danger in that, maybe. You could lie to that thing and get prescriptions for stuff you shouldn't be having, right? So,
Can you get Adderall and stuff from them too? Or do they go that deep, or is that more controlled?
I haven't poked into that aspect. I do know that Adderall is a controlled substance, so I don't think they can just mail it to you.
Right.
can they mail you some mushrooms?
What was that? What was that?
I might know a guy for you, Jack, if you're really interested.
Yeah. You gotta meet him at 12 o'clock, 12 a.m. on the corner. There used to be that psilocybin company that was MindMed. I don't know how.
Yeah, they're still going.
They're still going.
Yeah.
Oh yeah, look at them. Oh, that's pretty good actually. Could have gone in on that. But back to what we're looking at, NVO. I mean, what do you think? This looks like 47.20 around there. You go back to the lows. Seems to be at least that could be a support line right there at 47 or so. But as of now, I don't know. It's not a good time to do anything on NVO. But again, Wegovy is not going anywhere, so you would think that that if they do find support there, I feel like that might be a good time to start looking at another balance into a more recent and back into like a little bit of a recovery phase.
I mean, it could correct further down. I mean, the play started all the way zoom out. I mean, they started the run way back there, and now this reached the top, and maybe it just needs to correct for a little while and pull some of that juice back out of NVO. So
yeah,
it's just kind of.
I mean,
it's harder to try to pick this bottom in here. Well, I prefer to just jump on an already moving train.
Right.
I buy it at the market. I let it go up. Pull up ANET.
ANET. All right. You've been playing that one? Oof.
I just think it's easier. It's already trending higher. It's like almost child's play with this thing. It's just easier to jump on an already moving train, let it keep riding, get off after you picked up 2 to 10 points, find another one. AVGO. This is the gift that keeps on giving.
When they already
I'd be careful though. That's getting up there at AVGO.
Right before earnings. So what's you have a week? We have what, a month before? Would you think would you go long on this one with, I guess a month is not
Dude,
too close.
if you knew how long I was the stock.
Yeah.
But not only am I long the stock, I've sold calls way up over 300. I've got two credit spreads running on it that both expire this Friday. This
Heck, it's knocking on 300 today, right there.
We're just rejecting off of that level.
It's paying me 17 ways from Sunday, and it's
Mhm.
all because of that trend. Once you got a stock in a trend, you don't have to worry about how low can it go. That's hard. What we're looking at there with NVO, that's hard. That's Jeffry Turnmire.
Yeah, yeah. And
Because
you
you
like
can
this?
pick bottoms, right? You can pick bottoms, and you're great at picking bottoms, and you're great at picking tops. I'm not that smart. I got to just jump on an already moving train. So I
Yeah.
find that easier, but than trying to pick a bottom. But this thing it's full of cash flow. The covered calls, the naked puts, the credit spreads. It's ridiculous. All because of that.
Yeah. Jack, you say, I'm good at picking tops and bottoms, but I don't trade them that much. Usually I do wait for the reversal to actually show up in the chart and
Yeah,
then
Yeah.
jump on it.
but you're
Um,
right about it, though, is what, even if you're not trading it, like when you pick these tops and bottoms, you're exactly right. Trade them or not, pulling them up. I've seen you do it a billion times.
sometimes I get lucky. I don't know.
Yeah. Tony, how do you search for the trend? I mean, I don't know what that means. I mean, you can look at the trend, but if you're doing like a trend reversal pattern, like, and Jeffrey can probably tell you more, but you can just set a scan for 20% off
Or
whatever, 20%, 15% off all-time high or recent highs, 52-week highs or something. Look for that.
I'll
I don't
tell
have
you a real easy way, Tony J. When you're looking for a trend, start off with a stock that's made a new 52-week high, and then see, was that high just due to news? Did it pop real hard, or has it been in a steady climb for 6 months like this? Right? See, that's a real trend. So you got the new high that's happening within the context of a bull trend. That's
Mhm.
right there.
Yeah.
Well, I mean, you pull up a chart, 6 months or so.
Yeah.
Frame the price action. Is it moving from the bottom left to the top right?
Yeah. And
That's an uptrend.
get
If it's
off the
moving
day
from
too
the
sometimes. The longer term, like with the week, a week is good, right? Because
Six month chart is what I look at.
what'd you say?
and
I just look at a 6 month chart pretty much on
Yeah.
anytime I'm looking at a stock. A 6 month chart for me is where it's at.
yeah, see, that's what I said. Like 6 month, bottom left, top right, uptrend. Bottom
Yeah.
top left to bottom right, downtrend. It's
Yeah.
it doesn't have to get more complicated than that, really.
A lot of it is just yeah, it's just
And it,
you got to go through the charts, you have to
and
spend
if it
30
starts in the
minutes.
middle and goes to the middle, that's no trend.
Right.
So that's how I avoid stocks. That right there is just how, like, I wouldn't touch NVO or some of these other stocks that are down or try to pick a bottom. If it doesn't have a trend, I'm not into it. And
Mhm.
the other thing about it is I like a market driven approach, which means in a bull market like this, I'm not going to try to short stocks. I'm not going to play something to the downside. If it's market's bullish, I'm trading
Right.
long side. And in order to do that, I need stocks that are slightly more volatile than the broad market and are in a great trend. So that's where I start with a new high, Thomas, and then that new high has to be happening within the context of a 6 month trend.
Yeah. Yeah, and then compare it to the, overall market, right? Like
Yeah.
we're
Yeah.
we're the market and SPY, QQQ, they're all going up too, right? If they were going down, they're going to drag things down with them, right?
Yeah.
So it's
And the
so
other thing is, once I find a stock that's in a trend, I'm on it like stink on a monkey. ANET, I've been into that thing since the 80s. AVGO, I'm embarrassed at what my cost basis is on that thing. NVIDIA, my cost basis is 51. Just that's where it's at. I've been trading AVGO for credit spreads every week. Hey, don't tell them that.
I
I've been
know.
trading credit spreads every week on AVGO while it's been in this trend, and it's almost been too easy.
Hey,
Yeah.
Jack, what do you think about Spotify?
Oof.
Let's take a look.
Spotify did not have good earnings. Looks like they might be hitting a peak right there.
Was that a pop on bad earnings? That would have been
Uh,
Yeah, yeah, it was. Well, let's go. They had what they do. I guess they haven't released earnings. They're expected to be bad though. Wait, I thought I could have sworn I saw. Why isn't this updated on the earnings call? What was the earnings? Wasn't that today before market?
it should have been before market.
Yeah, I don't know why. That's weird.
Yeah, TradingView doesn't have it reported in the earnings bubble, but it does
Oh,
have
here you
it
go.
in their news blob right there.
4% after reporting an 86 whatever $1 million net loss. Q2 missing forecast revenue was 4.9, 4.1 below. So about, wow. Yeah, so they didn't do great.
But frame that in a 6-month kind of daily chart there.
Yeah.
Beautiful pullback right now.
Mm-hmm.
Yeah, you're I think you're still on the 6-month chart.
Oh yeah, you just want me to stay on the daily and go out?
Yeah, just look at the past 6 months.
In a daily chart. That's right.
Yeah, there you go.
That
Zoom it in.
overall, that's trending higher. So, if you were a guy that wanted to pinpoint entries, that you might be close to one.
I mean,
Yeah, see, we're coming to that prior consolidation.
Yeah.
This could be, this is on my watch list for one to pick up maybe in the next couple weeks, maybe down around 580 if we get down there, and maybe sell some puts like Jack loves to do.
Yeah, man, do love to.
I mean, what would you like 486?
Yeah, I mean,
Double bottom
like,
there.
I'm kind of liking that 580 area right now. I'll start looking at it.
580.
If we can hold support around 580, show maybe some support there, kind of grind that level for a few days.
Yeah.
Maybe opportunity to pick something up.
Yeah. I mean, there's really no other name in the game for this. I guess you could argue it's overvalued, but I mean, they have actually underperformed on earnings the past 4 quarters now.
Yeah, they pretty much ate Apple's lunch on the, Apple had the lockdown on Apple Music and all the, the streaming and stuff, and then these guys just came along and just destroyed them. So
yeah, Apple again, the jockey there, they need to switch jockeys. This guy is not leading Apple in the right direction. When Spock come in and take that piece from them, and how much bigger, how much more resources Apple has, how much more money they have to let a little tiny Spotify come in and eat your lunch, they should be embarrassed. Apple should be horribly embarrassed, and maybe do something, right? They're doing nothing. Start with getting rid of Tim Cook, get somebody in there that can pump this thing up and bring in some revenue and turn that cash into something. Sitting on all that cash for no reason. Bad management, Art. You're exactly right. Apple's sitting on a ton of cash. They're not increasing the dividend. They're doing their regular old buyback. They got about as many new products as my grandma, and their technology is just.
Yeah.
I heard a funny story about Apple. Well, if you ever look at somebody that's got a Samsung phone, the camera on that thing is about 1,000 times better than the Apple, whatever, 16, whatever. And so I'm talking to this guy that kind of works with Apple, not upper high management. And I said, why would you let Samsung beat you at having a better camera in the phone? And he says, I go, why don't you have the best camera? And he says, we don't have to. We're going to buy the phone even with the not the best camera.
I mean, that's true,
tells you what the cult status, a lot of people think that an iPhone is some kind of status symbol when it's not even the best product out there. So they've done a good job at PR.
Yeah, they make a lot of people think it's the best product, even though it's not. But
that's exactly right.
I bet you use an Android, right, Jeffrey?
Yeah, I've got a Samsung. That's what's holding up.
What about you, Jack? What are you, iPhone?
No, man, I got one of those phones that dials and then all the way back and then you
He's got the analog with the spinning around there.
I love it.
I have one of those that plugs into my cell phone.
That's funny.
Oh, you really actually though? You have one of those? That's pretty cool.
Yeah. All right. So I got a bearish trade on Apple if we want to throw it out there. I threw this out for free on YouTube this morning.
Yeah, you need a chart or you want me
No, we just talk about it right here. So I went out to December 19th, I bought a 175 put in December. It's only like $2.64, but I wanted to reduce the cost on that. So I flew down to the 145 and I sold that 145 put. And this is out to December. So it's, we're looking out 5 months. If the market does some sort of correction from this crazy high elevated level, Apple's probably going to get sucked down with it.
Yeah.
And, that's roughly about a $200 risk for almost a 3,000 potential on the 30 wide strike there. And, so real profit, probably $2,800 with a $200 risk. So that's like a 14-to-1 risk to reward. Not too bad. Not too bad. And I just, this is not like I'm putting 1,000 contracts on. I'm putting 2 or 3 contracts on with minimal
we'll
risk.
write these out, Dan. Jeffrey, if you wouldn't mind just dropping them there for
I'll write that out here in a second. But this is minimal risk. Put one of these on, maybe 2. $200 risk, $2,800 potential reward. If we dropped out before December, I mean, it's a reasonable play. Do I expect to get the full $2,800? Probably not. I'll be happy with $1,400. That's like a 7x return. So, but it's out there, and like I said last week, I've yet to profit off of anything I didn't play. So this potential, next leg down on Apple sitting there, and I thought it's worth a shot. Anyway, I'll write it out and put it in the chat here.
Yeah, it does seem like it's really having a hard time breaking over this. What I guess it's a 214 or so, 215. Just
it's struggling right there. It's struggling right at that 215, 220 area. And, that's a major resistance for me. And if we turn down off of it with any kind of enthusiasm at all, we'll probably push down to a new lower low down below 170. And my support level is all the way down at 140. So that's why I kind of picked those levels.
That would be crazy. That's going to be, I would, in last year, I'd say if Apple's at 140, you're going to see a really big downturn in the market to come along with that. But it's kind of disattached itself from the other higher performing tickers at this point, So I don't even know it necessarily means that the market turns down. I think Apple could honestly at least hit 170 just by itself. Without seeing like any, without maybe even seeing a market correction or anything. They're just not sending their best on here. So yeah, interesting stuff. If you haven't ever tuned into the Jack and Jeffrey days, lots of put selling, folks. Lots of put selling.
Now, this is a put buying with a little bit of selling involved just to reduce the cost, but this is kind of a hedge. To me, this is a portfolio hedge in case we get a turn down.
Yeah.
So,
in a market like this, I think you got to take advantage of selling puts in a raging bull market, right? That's where the money resides right now. Very few people do it too, so it's not a crowded trade.
Everybody's trying to go long, sell insurance.
But see, hedging stuff like QQQ sitting at an all-time high. Trying to buy the hedge there is rough because it can keep going higher and keep going higher. Whereas Apple is not performing. It's already an underperforming darling here. And it stands to get punished in another leg down because it's already been not performing. So that's why I picked the ones that aren't performing. They're already not following the path of the regular market. That's why my hedges aren't on SPX and it's not on QQQ, but I do have a hedge on IWM because it's got a very similar chart to Apple, and I have a hedge on Apple now. So,
yeah, Barbara, we can't give individualized financial advice, but we can, based on what we've been saying, take that with what you will. I'm bearish on Apple. Jeffrey, bearish on Apple.
Is it going to drop out by August? I don't know. If we keep if we go on to set the record number of days above the 20-day moving average, that could push us out to mid to late September. So we could keep hovering, keep grinding above the 20-day moving average until we set a new all-time high record number of days above that. I mean, the market can be irrational way longer than anybody can stay solvent in any position. And that's why I flew out to December. Give myself 5 months to be right on this baby.
I want to see this little news bit right here. This is okay. And I was just thinking, because one of the problems with Apple is that they've been sort of opening their ecosystem to try and compete to Microsoft, which is their biggest competitor, and against the whole Apple, ideology. But I guess they were already, so I thought when I saw this headline, JP Morgan was nearing to take over their Apple credit card program. I was like, oh, that's just another nail in the coffin, really. But it looks like it was already taken over. It was already being run by Goldman Sachs. So I guess that's not too much of a difference.
You know, when you
Apple doesn't have that banking infrastructure in the background to manage the credit card. But if they rolled out their own crypto, like Jack always talks about, maybe an Apple coin that could dominate pretty quickly.
we could use
Yeah.
that for commerce, right? But
Yeah.
here's the thing with Apple. When you look at that chart right there, people are saying, why would I want to stay with this horse when I can get out of it and get into a faster running horse?
Like
Right.
AVGO, right?
That's happening with
Look at the
everything.
difference in those charts.
Everybody's selling stuff that's, especially a tech stock that's not performing. I mean, just makes sense to get out of that and get into something that's trending higher, right?
Yeah.
Nobody wants this laggard watching when, other things are going up like every day. And, we look at Apple or something that's not moving, it's not keeping up with what you can get, right? Opportunity cost. If you're stuck in Apple, what are your costs, your opportunity costs that you're giving up? Right now, you're giving up a lot of opportunity if you're staying in Apple because it ain't doing nothing.
It's not
Yeah.
even moving. I mean, it's not even moving up, not even moving down. It's just sitting. And you look at Microsoft making all-time highs and Nvidia making all-time highs. And
5 year. And Microsoft at a 5 year high. That is a statement in and of its own. That's a great story. Five
Yeah.
year high, Microsoft. Pull up Microsoft.
I mean, look at that chart compared to Apple's. That's insane.
Yeah, trade out, just trade them like baseball cards. Trade
Yeah.
Apple. Take a look at Hood. Somebody wanted to see Hood.
Yeah, Hood's got earnings coming up on is it tomorrow, I think?
Yeah, I'm long Hood.
No.
So I got naked puts, covered calls. I got all the normal junk going on Hood. Loving
Yeah,
it.
I feel like these last 2 days, it's just so crazy to see a red day on Hood. It's
Good.
like
It
they're
has
just, they're just setting up for another leg higher. They're probably gonna. I could see them breaking 113, moving to 120 after the call. I mean, I don't see how they underperform on earnings.
They're going to take over. They're taking over Schwab. They're going to let you bet on all these side markets. Like uh, just any
they've,
side
they
bet. They're going to let you do it.
yeah, they've already got it like rolled out. Let's see, what was the thing I saw this morning was a bet on the baseball games or something like that. You can bet on the Fed decision tomorrow. You can bet on pro baseball championships already.
Yeah.
It's huge.
Morgan had a bet on how many times they would use some special word like during an earnings call. And he made 14% on his bet on that. Just anything, right? It is like you could have a bet on how many times Powell is going to say recession or something during one of his speeches. I mean, you can bet on crazy stuff now. And Hood is almost like a one of them sports betting, like DraftKings, right? They just
You can bet on the jobs number that gets released next week. You can bet
Yeah.
on U.S. GDP growth in Q2, unemployment for July, CPI, inflation, U.S. gas prices,
Yep.
a bunch of the pro baseball stuff, the American
Yep.
League champ, the National League champ.
Now you can't do that
It
on
makes you wonder what's going to happen with DraftKings. That's actually a bear case for DraftKings. They
it.
do have the DraftKings does have the partnership with like the NFL and the sports leagues though, so that could
Yeah,
support
but
them.
DraftKings and these guys, they're notorious for not paying out on a parlay that somebody won huge on. They just
Oh
won't.
yeah,
You won't have that with Hood. You just won't. They'll be more regulated, more like a broker dealer than
Yeah,
like.
they've structured their betting differently too. I mean, it's they make money. They make a 1% commission no matter if you're right or wrong. And
I love those kind of businesses. I don't
yeah.
like Spotify. It's just not a business that, I don't like Novo Nordisk. I just don't like it. But this is a business. I love the business that Hood is in, not necessarily DraftKings, but I love the business Hood is in. I love the business AVGO is in, so that's kind of the thing. I don't like airlines. Not into pharmaceuticals. I don't like stuff trending down. So
No, DraftKings is pretty predatory. We talked about this a few weeks back, but I mean, they'll literally, if you're good at sports betting, they will kick you off the platform.
it will
So,
kick you off the platform. They'll ban you for life. And if
yeah,
you try to put in a bet that look like your other bets, they keep all that profile. So those guys that do all those parlays, you put that in through another person, they won't pay out on that one either.
yeah, exactly. Art like the casinos, they're not going to let you be too successful there.
Now, this new rule though, right, where you can't write off your losses like Ezra was talking about. So you remember that?
Yeah, I would wonder if that's going to be changed. I don't know how that works for bills if things can be changed, but that basically eliminates, yeah, professional gambling.
Totally does.
Yeah, Ezra would have to explain that, but it's basically you used to be able to write off 100% of your losses. Now you can only write off 90%. So it makes the P&Ls of a professional like poker player, well, there is no P&L. There's no profit, right, at this point. So that's pretty bad, and I'm curious as to how that got through. But we'll see if it. I don't know if it's going to be changed or revised or what. Um, but yeah, I mean, I think DraftKings doesn't care about that because they don't actually get any. They don't allow any good gamblers on. So, and there are people who actually are really who do. I mean, besides poker, right? I mean, there are professional sports gamblers who are good at it. Which that also eliminates any successful gambling.
This is going to bring back your local bookie.
Yeah. Yeah, I'm long the Corleone family after this. Uh just back to this so there's a few little news items. We can get back to the charts, don't worry. Uh looks like stuff's happening. We're just talking about Apple. They're gonna open a manufacturing academy in Detroit to teach people how to do like the AI and the well, more of the hardware manufacturing than AI. I don't know what that's going to be administered by the University of, I don't know, Michigan or something. Um, but Mars is investing $2 billion. So it seems like, these companies, this is on the back of a ton of others talking about investing more into America. So it seems like Trump is ostensibly getting what he wants with these trade deals, with these and reinvestments into America. So yeah, I mean, again, these are all let me know if I'm wrong about this. I feel like these are all tailwinds for the markets, right? I mean, we are I feel like this should push the markets forward and up and to the right more. Pretty cool. I don't know. We'll see how it plays out though, right?
Well, the market used to freak out every time the word tariff came across the wire. Now people just shrug. They don't care
Right.
about it. And I think that's ironic. And it just goes to show you how wrong the market can be, how wrong analysts can be. All those gloom and doomers that were gloom and doomers before the tariffs, they really got glooming and dooming about
Yeah.
the economy and everything else. And now here we are right now, right? Mohammed El Arian and all those guys talking about
Oh yeah.
worse than the Great Depression. How can you be so wrong and still in business? I mean, the entire market sold off on Liberation Day. And I just remember looking at this like, this is stupid. People don't even know what is a tariff, how it works, how it plays out, what's the long-term effect of it. I was just in there buying because on that Liberation Day, that was almost like long-term holders liberation day where you could go in and buy stocks cheap on the dollar just because everybody was throwing out the baby with the bathwater because they didn't know what the effect of a tariff. Man, here we are just months later when tariff, people just shrug at it. It's just so funny how fickle the market can be. One of the biggest crashes in history, right? That tariff day, right? One of the biggest losses on individual stocks ever, and it turned out to be nothing.
I will
But
say
I mean,
at the chart, obviously not, I will say you look at a hood though. I mean, honestly, the hindsight's 2020, but they actually held up pretty resiliently versus some of the other big caps out there, even on the tariff news. They didn't drop too hard. So
what was Robinhood gonna get tariffed on?
yeah, I know. Right, right.
The reaction there was just throw everybody out and then pick up the pieces later.
That's it.
Yeah.
That's what it was. I was looking at stocks. They were just selling everything across the board. And then, the program selling starts to pick up when there's a little bit of selling. So it just accelerates. And now looking back on it, it's like, man, I was in there buying AVGO, everything. And it was kind of like a gift. So I kind of hope we get a big sell-off here coming up too.
So
And
you guys talk about those the selling the puts, doing the covered calls and stuff. do either of you have? I've gotten some people asking about the YieldMax funds. You heard of those? The leveraged ETFs that do all that stuff for you.
So leveraged ETFs and YieldMax are completely different. And the YieldMax stuff pays out the NAV, which is net asset value. They pay their dividends out of that because they can't necessarily maintain the options gains every single period.
And yeah, you look at maybe the YieldMax fund pays 146%, but if the net asset value goes down 60%, is it worth it, right? So I hate these things. And going forward, there's so much better way to do it individually. You can make so much more money doing covered calls yourself than trying to get involved in a YieldMax strategy where that's not even dividend income, that's derivative income. And like Jeffrey said, that is a hard thing to keep on top of. Very tough. So you look at almost all these YieldMax funds are down in price, but they're advertising triple digit yields.
They're just eating their asset value in the underlying, and that's not a long-term sustainable way to play.
Yeah.
And
what about for people who can't afford MicroStrategy to sell covered calls on it? What is that? What if you have for people, for folks watching have smaller account sizes, would it be applicable? Would it be maybe an option for them if they want to get in on this covered call game on this?
This isn't an option for anybody but a sucker that is trying to buy high yield and doesn't understand that the erosion of the value of his account. So your account will be down even if you got that high yield, right? You're watching that the yield itself is going to be as much as the price dropping. So,
and you have to be you have to watch it too. You have to make sure you're in the drip, and that you probably turn the drip on and off. You don't want to drip at the high prices. You want to drip at the low prices. Right. And
talking about reinvesting, right? This high yield pays every month. Do you invest it back into this yield?
I think that's what the idea is, that you lower your cost basis. So even if
I hate these things, man. I wouldn't recommend it. Again, you can do it a covered call yourself and do way better. And we're already doing that with IBIT, Goog, and NVIDIA. You don't need these. It's a mirage. The yield is a mirage.
All right, folks. So for anybody who's wondering about those YieldMax, an icy reception from the Jack and Jeffrey corner.
I like
it. But there's something like you could take the 2x leverage MSTX and that's only trading at $36 right there. And you can do the cover call stuff here. If you really, really wanted to be involved here. I do it on TSLL, Tesla. TSLL is the leverage long on Tesla. I've been selling the $10 put. I've probably done 6 or 8 $10 puts every time it dips. And I've only been put one time, and I just keep cashing out those puts over and over and over. I mean, and the one time I got caught, I wrote it up $2 and sold it out. And I just keep going at it. Keep going at it.
Crazy, because if you do a naked put on margin on this thing and it's $10, you only got to put down $2.
Yeah. It's crazy.
Yeah. It is crazy. That's less margin than is required going long a stock, which is 50%, right? So that's why I say this margin rate on naked puts, it kind of flew below the radar of everybody. And when I started in the business, you had to have 100% of the money in your account, $250,000 account minimum, blah, 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 to sell naked puts. Now anybody can do it, right? On margin, you need level 3 approval and you're good to go. And the yields on these are amazing. What can you get for a $10 put on that thing right now?
Oh, let me pull up the chain and I'll tell you. I've been getting anywhere from 10 to 20 cents a week.
Wow. And that's all you got to do, right? You don't even have to worry about the Fed or the broad market. Most traders I know that have been successful, they got 2 or 3 strategies, right?
It's like right now, next week, looking at the $10 strike, 19 cents is what it's going for.
Dang, that's fat.
For August 8th.
So fat, even on a cash basis or margin, either way, that is probably the trade of the day right there, baby.
It's just crazy. Like, and Tesla just keeps churning in this area. And like you said, Jack, that just makes you money when it just churns as a market maker, and
Yeah.
they're loving it.
Doesn't have to go anywhere. I love that. I love any trade where you don't have to bet on it going up, right? Uh, where you can make money if it goes up, down, or sideways. That's the best, and that's what.
Yeah.
Yeah.
Multiple direction win rate. You gotta be on not if you're playing just calls or puts, you gotta be right on direction and timing, right? So you can be right, just doesn't go up in your time frame at your expiration date, doesn't go down at your expiration date.
And
But
we were talking about that last week, how even some options, they're priced so high that even if the stock does make a 1 to 2% move, the option doesn't move at all. And so
Mhm.
you're stuck. It's like quicksand. You buy that call, you paid too much just because demand was there. The stock does make the expected move, and option goes up 2 cents.
Yeah.
Bad game, bad
Yeah.
game for buying calls. Really rough. It's tough. You got to have a super compelling reason to buy a call right now because the market makers, they got to price in any expected move for the day, anything outside that could happen, a black swan event, more buying. It's become really tricky for them. And so the only way they could cover their ass is to jack up the price of that call option so they have a better chance to cover if they have to short it to you.
Yeah, it's like just on this one we've got up, TSLO, the IV, the implied volatility priced in right now, even 1 week out, is at 100%.
Yeah. Which is
And
great for selling. You want the higher IV when you sell, folks.
yeah, and that just means they're thinking that's the market makers are pricing these options for 100% move.
You believe that? So
And
what does that mean to the folks here? That means that if they're pricing in 100% move, that and you buy that call, the stock would have to move 110% probably for you to see even a 5% gain. So
Yeah.
it's buying calls, you're trapped almost. Terrible. Now, when you're a seller, that's what I'm telling you that you're buying, you're taking other people's risky bets and you're putting them in your bank account.
Yeah, we can, I mean, just to show that to people. So if we go to TSLL, let's see what we do what, the eighth? What would it
I was
be?
just talking about 1 week out, a
The eighth,
week and I
what
guess
was the
week and a
strike
half.
you're looking at?
I was just looking at I was talking about a $10 put, but
That's right.
if just the at the money, for is where the IV structure is, at least on the chart I was looking at on TradingView. Pricing at 100% IV right now is just, or 96% or whatever. It's just crazy. I mean,
Not going to happen.
You can see this, how much it's gonna, it's a losing game. There's way more, and it's just,
Yeah, people are buying a bet that the stock is going to double, right? All day long. Now, what are the odds of that happening?
yeah.
Slim to none. But do they understand that when they're buying these calls? No, they're just
No.
handing their money over to this option seller. That's why
I definitely
right now, this is the best time to be an option seller I've seen in 40 years. No joke.
really, yeah. Well, I recommend everybody use something like this. I mean, you can use, I like option strategies because it's more visual than you can do it in Thinkorswim or really any brokerage, but I like how it's visual. But yeah, when you're thinking about going in long on an option, put or call, like look at the probabilities and like how much it has to move and win because it's usually worse than you think it is. So, use a tool like this before you put any money down. Definitely recommend that because again, this option's all again. You buy a long put or call, you're losing to time decay, right? So every day that goes by that stock is not doing what you think it needs to do, your option's losing value. Speaking of, go ahead.
Time decay is the option investor's greatest friend. I love it.
I like that option investor. I like that.
Yeah.
It's a good.
Well, if you're buying an option or you're selling an option and the stock doesn't move, that option, and even if it does move up, that option is going down down in value every day. And in that last week of expiration, man, that time decay really starts to chomp on it. And
Mm-hmm.
I love that. Just love time decay.
no,
It's horrible when
And
it's working against you, It's absolutely horrible. It'll keep you up at night. But when time decay is on your side, you're going to sleep like a baby.
Yeah, it's
And
always
one,
that the decay curve for 30 to 45 day out options. It's like if you're selling them 45 days, that's when like between like I think day late 30s, early day 40 or so is like when the curve, like the knee really starts to sink in your favor. And if you're doing weekly options, it's usually on Thursday that decay really afternoon on Thursday the decay starts to work in your favor for if you're selling the weekly options, right? So it's at the tail end of the expiration.
Yeah.
I find, if I'm going, if, I've been talking about how I've been doing these weekly options, and I find that getting in Thursday the week before is kind of the sweet spot because they accelerate the premium out for the weekend, usually by Friday close. And that way, when they open Monday, there's no price change really, as long as the underlying didn't really gap up or down. And so they accelerate that premium out Friday. And then then it's kind of easy going Monday, Tuesday, and then Wednesday you start seeing this acceleration pick up again as we, head into that expiration day. And sometimes you can close them out for 90% of the profit by Wednesday or Thursday. And
Oh, cool.
and then that's why I get back in on Thursday looking for the next week out and, rinse and repeat. And but I do caution everybody selling, a lot of people will not think about the fact that, for Jack and I, you need to be able to take those shares if things go against you. Um, for me,
Well, if you're selling a naked put or whatever.
if you're selling, even if you're doing a credit spread though, um, your risk to reward is kind of very skewed. I don't think a lot of people think about this when they do a credit spread, is that the real way to save one of those is to take the shares. I mean, a catastrophic failure going all the way through both strikes, that's pretty, that's rough, and it does limit your losses. But at the same time, if you can't take the shares, you have no option but to take that loss.
Well, you have another option because when you have a credit spread, you have that hedge, right? So you're short, like look at AVGO right now. Like if you're short the 290 and you're long the 287.50 and the stock gets down close to 290 where your short put is, if you cover that short and AVGO plummets and you stay long the 287.50, you could end up making 10 times what you set up to make.
But I'm saying if it just drops through both strikes, if you wake up and you're sitting there, you're like, oh, I didn't pay attention, I wasn't watching, it went through both strikes. If you can't take the shares, you got you're kind of stuck at that point. And I don't think a lot of traders think about this. It took me a lot of years to really think about it and figure it out that if you're trading at such a size that you can't take the shares on a credit spread, you're trading too big. I mean, it looks like it's a great always win type of trade, especially the way some gurus sell it. But it's one of those things that you can get yourself in a lot of trouble really quick. You're taking in, 15, 20, 30 cents credit on some of these, but you're sitting there with a, 70, maybe $1.70, maybe $3.70 risk. And, that's the risk reward's really skewed. Unlike the one my Apple debit spread, I was talking about like a 14x risk reward, but most of, you're never going to get more than a 1-to-1 risk to reward on a put spread, credit spread. Very rarely would you even get a 1-to-1. Most of the time it's like you're risking 4 or 5 to make one. And it's just backwards.
And be careful with the strike widths too, because I mean, if it lands between those strikes, that's pretty bad too.
That's pretty bad.
But if you take the shares, if you take the shares, that's a whole different ballgame. That's why I've moved more into just naked put selling, because why spend the money on a hedge, or why buy the long down there to protect it when I can just keep the credit, take the shares from if it gets there, and then start selling more credit on the upside. So, but I have to go after quality names, like I've talked about the last couple of weeks. You can't buy the knife. You can't do these on a knife fall, like because the knife can keep cutting limbs off, and you watch your account. Yeah, don't do it on UNH yet. Wait till we find a bottom.
You got to have a trend. You got to have an uptrend. Then the naked put works. Then the credit spread, bull put spread works. Once you got that trend, you've taken out most of the risk. If you're trying this on stuff that's going down, you're gonna get killed.
Yeah.
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 And
So
you know, I wanted to bring that back around because I think a lot of people get trapped in this. They chase premium, especially because beaten down things have high put premium, but for a reason. For a reason. And a lot of people get in this trap of chasing premium selling. And then you're like, well, credit spreads suck because they always lose, and you know, it just takes a couple and it eats up like 10 wins, and you know, um, you're going about it the wrong way.
Exactly. Yeah.
yeah.
You're having that problem. You're going about it the wrong way. Yep.
You know, if you do spreads, I mean, I usually go like 30, 35 delta for it. I mean, because if you go out farther, you have a, you know, like there's like you have to get into with credit spreads too, you have to get into like the R, like, right? So it's like if you go out farther, yeah, you're gonna have a higher percentage of profit, but like your total profit per contract, per spread you're trading is gonna be like $20. And then your max loss when they inevitably will move against you is gonna be 400. So how many $20 trades do you have to go win to, you know, basically break even on that? Where if you go, yeah, you're going to go more closer to the money on the spreads with the higher delta, but you're also going to, you're going to be making more premium on those. You're also going to be risking less for a max loss. So, and sometimes, and that makes it a lot harder to find, I think, to find good credit spread trades because, you know, you have to look at the technical levels more and figure out, okay, what actually is the good support line with that also offers a juicy premium that's close enough that my R is decent for these trades, right? So I mean, I go 30 to 35 for the sold option, right? Delta. And let me know if you guys have any input on that, but just for everybody watching, that's how I do it.
A lot of times I have two different ways I go about it. One is I look at the gamma. I have a gamma glitch trade that I chase on a few names. And then I also look at the standard deviation of what they expect to move by the expiration. And I usually hang out 1 to 2 standard deviations out because that lowers your chance of, you know, raises your chance of profit, lowers your chance of getting in trouble. And Jack, go ahead.
I, I'm not smart enough to use gamma and delta. I really know what they are. When I put on a credit spread again, the stock has to be in a trend. So if you pull up AVGO, I'll show you what I did this morning.
Yeah. We'll come back to SoFi R. Just hold on.
So what I do is, look, let's say you got three. I use Trend Point software. It has, you know, three trend lines similar to this. So if I were to start this one, I would look for to put on the sold put at below support, right? Maybe slightly higher if the stock was up there a little bit, and then buy the lower strike price put right there. So I did it this morning. I sold the 287.50 and bought the 285. I had a 30-cent net credit. That's 12%, and that trade ends Friday. So I'll take 12% in 3 days all day long.
287.50. And sure, I'm just gonna
287.50, and I bought the 285. So
this is for Friday.
this Friday, yeah, and that 30-cent net credit at 12%, and they call it a 3-day trade. You know, Wednesday, Thursday, and Friday's expiration. So as long as the stock stays above 287.50 through Friday's close, I'm golden. And you get paid up front. So I got paid today for the trade. Now you would think that you would only get paid if the trade worked out at expiration, right? When you're selling premium, it's just a contract between two people, right? The buyer and the seller. So the buyer's money goes right into your account instantly when you're a seller. That's guaranteed by the CBOE. So I'm sitting on the profit now. Do I get to keep it? Do I got to make an adjustment? But I love getting paid first, right? Love that.
And if the stock goes up, I guess you sold a put spread. So, right. If the stock goes up, you know, you're going to be looking good. If it stays here, you're going to be looking good. And if it goes down, you know, as long as it's above basically that break even price, which is would be a little what, under 287.50, like you're still looking pretty good. I mean, you'll break even, but like if it's above 287, you're good.
Yeah, you can every week. You know, I had I had one fund that just did credit spreads only back in like 98 and 97. And we could only do it once a month because we had to do everything else. The rest of the time, options just expired, the third Friday of every month. And
back when we only had monthlies.
back when I had hair. And now when the invention of weeklies came out in 2010, that changed the game for me for everything. So now here's a trade I could only do once a month. Now I can do it 4 times a month. But oddly enough, they came out in 2010, and I didn't figure out this game as perfectly as I have it now until November of 2011. So it took me about a year of losses and getting bloody noses and getting my teeth kicked in before I got it down to where I could have a 96% win rate.
Yeah. I mean, that's awesome. That's awesome. Yeah. So it looks like that one you took was like 20 delta on AVGO. So it's conservative, but it's like you have to choose, right? You want to, it's a trade-off.
20 delta is a good place to play. I mean, you win a lot.
Yeah, you do.
I should look that up then, Delta. Maybe I should start to follow Deltas and gamble.
and Jack,
the Greeks. I was like, man, I don't know Greeks, right? I barely made it through high school. I can't be studying Greeks.
Jack, you and I.
Go ahead, Jeffrey.
Then I was going to say, Jack, you and I have been talking about maybe starting our own show just to tease this out a little bit. Yeah. Maybe I teach you a little bit about Greeks if we do that.
I would love to talk to you about the Greeks. No, I got to admit, I probably forget it by the time the show. Love to learn.
I can make it dead simple.
Teach Homer Simpson the Greeks. If you could
make it real.
I'm in. You could teach me.
We can make it some really simple tricks on how to use it to predict probabilities in the market. It becomes really simple to I like to keep things stupidly simple, and like you said, the Homer Simpson way. That's what I love doing, because when it's super simple, you don't make mistakes.
Right.
Yeah, folks. Delta is basically if you're looking at what my chances of this option, being in the money, it's basically if you take a 20 delta, the chances of it being basically being out of the money is 80% at expiration, right?
Yeah.
So
it's 20. Basically the delta tells you the percentage chance, just real roughly, the percentage chance it's going to be in the money.
Yeah.
But I'm here to tell every single person in the planet, you do not need to know the Greeks to trade options. And people think you don't. I haven't used a Greek in 40 years, and I don't know how, and I don't know that I want to know how, but I'm willing to.
It's just another weapon in your back pocket to make you feel better.
No Greeks and mushrooms while trading, right?
So it's really interesting. Big news tomorrow. We all know we talked about this yesterday. Don't want to stand too much on it. We got jobs claims, got FOMC on Wednesday, jobs claims on Thursday, ADP is whatever. Ryan saying no Greeks and mushrooms while trading. Well, that's probably pretty good.
Takes all the fun out of it.
Yeah. Maybe a little microdose of mushrooms, Ryan.
I'll take the mushrooms and no Greeks. How about that?
So we're talking about premium. So I got that premium scanner that we've been only Greek salads. Nice. Get some feta in there. Mega premium scanner. I was looking at, so I'm in 3 positions today: Tesla, Rocket, and Netflix. Just selling spreads on these. I was looking at my premium scanner earlier this morning. If you're in my Telegram, you got those. But first off is Tesla. Looking pretty good. Let's see, we took the 310 and 312 put. So pretty, again, this is, when you're, I know Jack might disagree. Well, I don't think you would disagree with this. You do have to look at the trend and do some little bit of chart work to figure out your support levels. But 312.50 here, that's the one I sold, and then the 310 put down here. So I believe I got 68 per contract, $68 per contract on that. This is expiring on the weeklies. So again, I think that was at like low 30 delta. So 70% chance of being out of the money, which means basically 70% chance of winning this trade. And I was looking at some consolidation zones, some resistance or support zones right up here, which is why I want to be a little more conservative. I mean, we are right here, 320. Again, I'm just waiting. The thing with the premium is you don't have to collect 100% if you don't want to. You could get out at 20% of the premium gain. You get out usually 20 to 50% is profit target I like to aim for. I don't know about you, Jeffrey and Jack, of the premium.
I go for the whole 100%. I want
You
the
go for
whole.
100.
I go for a zero value expiration. I want to keep 100%. That's just me.
Yeah, Jeffrey, what do you do?
And well, it depends on my strategy. I'm working on a new idea where I keep 50% and get out and move on. And for a short-term day trade, 24-hour type trade. And then for my weekly put selling, I'm usually going for 90%, 90 to 95%, and get out and recycle that money. Sometimes that value erodes by Monday, and I can recycle it, a second or third time each week. So it's kind of crazy.
That's
Just depends on
capital.
It just depends on how aggressive you want to be, how much you want to pay attention. If you want to take the easy way out, I mean, Jack, he's sitting there with a cigar in his mouth, going out fishing, riding bikes, doesn't want to sweat it, doesn't want to worry about it. Just look at it once a week, sell your premium and walk away, come back next week. So that's a stress-free, laid-back way to do it.
You can get an alert from your broker if anything's happening, right? So my biggest issue is there's no cell service when I'm riding my dirt bikes around here. So I get the alert anyway. I got to come back to the cabin. But, if I set it up right, I don't worry about it at all. If something's going to happen, it's going to happen. But if I was going to worry about it, I wouldn't do it, right?
Well, how long you been doing this, Jack? And, you don't even sweat it going out there.
How long I've been doing it, I got to tell you. I'll try to imitate my Uncle Jesse if I can, and he'll tell you how long I've been doing it. He goes, Jack's been trading stocks since Moby Dick were a sardine. Moby Dick was never a sardine, but I get his point.
Yeah, that's awesome.
Yes, I mean, so Jack does this and he's stress-free about it, and he's out there living his best life, doing the stuff he loves to do every day and not sweating this stuff. So this is a stress-free way to trade. And he's sitting there telling you, he can go without cell service and he's not sweating it. He's not stressing it. So that tells you something right there to me.
Thank you.
Oh, for sure. Yeah. Yeah. And then again, so the premiums today were pretty juicy, honestly, on Netflix too. Again,
everything.
This is 1185, 1187.
I think Netflix has got another $100 to go before we find support, though. Be careful.
Yeah, well, I took a call spread on it, so
if
it drops, it's good for me.
Well, there you go. You're on the right side at least.
Yeah.
That's a beautiful thing about credit spreads, in my opinion, is you can trade them from a bull standpoint or from a bear standpoint. And so you have a trade every week or whatever you want, no matter the overall market conditions. So for me, if all three indices, the QQQ, SPY, and DIA are above their trend points, then I'm using the bull put spread on stocks that are slightly more volatile and trending better than the broad market. If the broad markets, all three of them are below the trend points, I'm using the bear call spread. Market driven approach, you're going to have much more success. So that's how I keep it simple.
Yeah. It's you do need to look at trend though. Trend is important with spreads. That's like the basics of it, right? But that's the cool thing, right? Is people don't you have a thesis, you trade thesis. You don't just have to play it long or short. There's so many different ways. I mean, you can do other stuff like butterflies and stuff. But
I've never made money with a butterfly.
They're hard. They're hard. They're hard. But there's so many different ways to sort of play out your thesis on the markets. But
yeah, I mean, it's great in theory, but I've just never made money trading one. I always get stuck. We're in this illiquidity thing.
Yeah.
Exactly. I know a guy that trades butterfly spreads and he hates them, but he just keeps doing it. And I don't think but somebody somewhere told him it was their favorite strategy somewhere along the line. And so he keeps trying to make it work. It's like pounding your head against the wall when, and especially right now, there's so much easier ways to make money than trying to force a crazy butterfly, right?
Yeah.
Hey, hey, can
And
we talk about one of Jack's favorites, IBIT, real quick?
Yeah. I loaded up on more naked puts at 65.
I sold 64.50s for Friday.
Yes.
So I sold it on Friday, on that dip last Friday. Sold the 64.50s out for next, for the August 1st.
Nice.
And
This has everything going for it in terms of it's super affordable if you want to do a naked put. It's going to be a lot less money on IBIT than it is on Tesla. And
yeah,
IBIT has a better trend than Tesla, right? IBIT's probably got a beta over 2, so the options are going to be juicy because of that volatility. And you can play this one. You could buy the stock, sell covered calls. I'm doing that. I'm long 1,700 shares, selling 17 contracts all the time, and I got the naked puts going. And the only thing that would make this more beautiful is if this little sucker paid a dividend, but it can't do that. So that's the only little thing that I'm missing here that I normally want to have. But the way this thing trades is so amazing and the compelling story behind it. It's almost like whether you believe in Bitcoin or not anymore, it's like you kind of have to own it, right? So I love the way this thing trades. I love this price. I'm shocked that it's not above 70 and staying above 70. So I think this is a great opportunity for everybody right here. But you got to be a Bitcoin believer. You got to believe that it's going to be adopted and somehow used, and these reserves are going to take shape.
I don't know that you have to be a believer to take advantage of the fact that it's got sweet, sweet premium. And I mean, you kind of have to believe it's probably going higher from here. Otherwise, why get involved? Because back to the whole thing I've said several times is like, don't sell puts on something you believe is going down, or try to catch a knife. This has got a
right.
solid uptrend. It's had an uptrend for several years now, and we're probably going higher before we end this Bitcoin party on this cycle. And Jack and I are both involved in it right now. It's a keep it stupidly simple way to get involved in crypto without trying to figure out crypto wallets or what the heck a Bitcoin is or a Satoshi or any of that stuff. And you
We
don't
got
have
some
to
big
worry
earnings
about it.
coming up on crypto this week. Obviously, MicroStrategy and Coin stay out until those, or just don't, or just full send into it, regardless of will it
Yeah,
affect IBIT at all, these earnings?
well, see, IBIT is Bitcoin.
Mm-hmm.
Like that's all it is. There's nothing else. There's no treasuries. There's no anything else. That's why there's no dividend. It's just Bitcoin. So it's a pure play. And Jack's sitting there shaking his head. It's unaffected. Like, unless you think that Coin or MicroStrategy or one of these is going to drag down actual Bitcoin price,
No
which is
way.
not. That's the tail wagging the dog. Um, they're the ones holding on for dear life for holding on to Bitcoin's shirt strings for dear life, while Bitcoin's on this master run. Bitcoin's the big driver of the whole sector.
Totally.
You can argue any other way, but it's irrefutable to me because it is currently 63% in the entire crypto industry is Bitcoin. Period.
It's the only one to trade. And I think it's funny, they talk about the word, they use the word, markets are always using the word tokenization, where you turn some asset into a token that you can trade like on a coin. But here's an example where they took something and didn't tokenize it, but they took Bitcoin and marketized it by
It's kind of the reverse. We securitized it.
exactly they did. So what happens now? Now you can sell calls because they marketized it. When it's tokenized, there's no options market in those crazy little tokens like Shiba Inu and all that. You can't buy calls and puts on that crap. Now that they've marketized IBIT, that's cash flow heaven, baby.
Hey, what's the Solana? There's a Solana ETF too, right?
There's a couple of them. SOLT. I know the leverage ones. I don't know the not leverage ones off the top of my head.
Okay. Okay. No spot. There's a spot price one for Solana, I think, too. Just curious.
Let me see if I can hash it out really quickly. I don't know that it actually trades like this one does yet. Yeah, I know
Okay.
they have a, IBIT has, or BlackRock has an Ethereum one, but I don't think they've rolled out a Solana one yet. I was looking for it. I'm not finding it.
Speaking of ETFs, have you seen all the push into the ETFs getting into the private market, where they have that cross between publicly held stocks and still
Yeah, we were talking about that. What is that? There's one ticker. I always forget it.
XO?
They're invested in like space. Yeah.
Fascinating that you could take a position in Starlink or Anthropic when they're not even public yet and do that via an ETF that's already got its toes in the private market. And those
No, yeah,
ETFs,
it's pretty cool.
if you got an ETF that has a position in a private market and down the road that thing comes public, that ETF is going to explode in price.
Yeah, those are pretty
Crazy.
cool.
Yeah. Yeah.
Ryan saying there are a few new
yeah,
ETFs on
ETH.
Solanas that are on hold.
Yeah. Yeah, ETHA is BlackRock's thank you. There you go.
Yeah.
In the chat there. ETHA.
I got to tell you, I'm long BlackRock too, because I understand the asset management business very well, and they're just collecting fees, and it's funny is people say, oh, now Wall Street believes in Bitcoin because they're bringing out these ETFs about crypto. Wall Street doesn't care. They don't care. What they care about is can they create a product that you'll buy?
They
That's
don't
all.
care about anything. Yeah, it's just the money. Does this make money?
Yeah, they're not saying that Bitcoin's going higher. They're looking around and saying, what can we create to sell?
Yeah.
That's how it works. That's BlackRock.
Can we create a instrument that we can collect fees and trading profits on, commission fees and commissions on that people want to trade? And that's why you see so many of these leverage ETFs hitting the market. That's why, you see so many of these securitized tokens hitting the market, and they're just trying to bring more accessibility to more people to get more fees, collect more fees off of it.
I love it. I've made a lot of money on BlackRock. I'm not selling this sucker. It pays a dividend. I got covered calls on it. It's a little too pricey for me to do naked puts, but I don't want to tie up all that money on that. But this thing has been amazing, and I love this business. Like, I don't like Spotify business, but I understand the asset management business. And Larry Fink, you talk about a jockey. Yeah, this thing will be $2,000 soon.
Woo. All right, there you go. July 29th, 2025. Jack called it. Let's see if it happens. This is in the history books, gentlemen.
Okay.
I want to get back though. Let's go to crypto, because you were going to talk about crypto today, right, Jeffrey?
Yeah.
Some you trade. At least
I like to keep it simple though. Like we were talking about IBIT, and a lot of people when they get started, they don't want to worry about the fact that there's 19 million cryptos. Just that might blow your mind a little bit, but there's 18.93 million cryptos listed on CoinMarketCap right now. That is a lot. That's a lot. Like, how long is it going to take you just to go through 1,000 of them? Let alone, like, how long would it take your life to go through 18.93 million? I mean, there's only 31 million seconds in a year. If you looked at one a second, it's going to take you half a year. And that's with no sleep, no breaks, no potty breaks, no nothing, one a second. And
there's always more coming listed too. So
and there's like 100,000 new ones every week. So yeah. Why mess with that? Why try to keep up with that? And 99.999% of it's all garbage anyway. So I found a way to keep it stupidly simple. Avoid all that. Avoid all the stuff. And I can share my chart here.